This is Real Estate This Week with Stephen Gasque, continuing 16 years on air and online, helping you succeed in buying, selling, and investing in property. The best real estate strategies out there just for you.
Welcome to Real Estate This Week. Hi again, I'm Stephen Gasque, and happy holidays. I'm so glad you're here as we look at the year ahead and everything home buyers, home sellers, and homeowners need to know as we enter 2026. There's so much happening in real estate, from home prices to mortgage interest rates to the supply of homes for sale. So, let's find out what we can expect in the year ahead. Joining us now is Danielle Hale, the chief economist at Realtor.com. Danielle, welcome to Real Estate This Week.
Thanks for having me, Stephen.
I am so glad you're here. And Danielle, happy holidays.
Thank you. Happy holidays to you, too.
Thank you very much. Now, Danielle, let's get right to it. We saw somewhat better conditions for home buyers in 2025. A small decrease in mortgage interest rates, a small increase in the number of homes for sale, and home prices, well, they were up in some areas, flat in others, and in some they were even down. So in 2026, will it be a better year to buy a house than it was in 2025?
In a word, I would say yes. Though, as you noted, there's some regional variation, so it will depend on where you are. But on net, across the nation, we expect to see more progress. So more homes available for sale in 2026. As a result, I think we'll actually see more home sales and stronger growth in 2026 than we saw or ultimately expect to see for the whole year in 2025. It's going to be close. But I do expect we'll see a little bit of growth. And then on the price side of things, we do expect home prices to go up. But we expect incomes to go up faster and mortgage rates to be down on average across the year. So even though home prices are going up, which is good news for sellers, I expect that it will be more affordable to buy a home for buyers next year. I think the monthly payment that it takes to buy a home will drop for the first time since 2020. And as a share of income, buyers are going to have to fork over less than 30% of their paycheck for the first time since 2022. So we are seeing nice affordability milestones in combination with more homes for sale. It's going to be a better year to buy a home in 2026.
Danielle, that is great news, especially the wage gap you talked about. Because for so long, the amount of money people made wasn't really enough to keep up with rising home prices. But now it's a lot better?
Well, it's getting better. I wouldn't say it's a lot better, and there's still plenty of room for more improvement, but it's nice to see that trend moving in the right direction.
Interesting. A couple of other things I'd like to run by you. One, the median age of first-time home buyers is now 40. Danielle, that's incredible.
Yes, that data comes from the National Association of Realtors and their profile of home buyers and sellers. It shows that first-time buyers are getting older, a trend that we've seen over the past couple years with a more significant jump in the most recent data. I think because we had seen affordability really vanish from the marketplace, first-time home buyers had gotten older because it was older buyers that had higher incomes, had more savings, were better qualified to actually get into the housing market. We're probably at stages of their life where buying felt less optional and more like something they had to do. So, we don't have a specific projection for how old first-time home buyers will be, but the improvement in affordability should help reverse some of that trend of older and older first-time home buyers. So that's going to be good news for first-time home buyers. That 30% mark, though, that generally indicates the difference between a house being affordable versus not affordable. And we are moving below that threshold in 2026, but there's still plenty of room for more improvement. As I was saying, we'll be at probably 29.3% of the typical income to buy the typical home. So it's not necessarily going to be super easy for first-time home buyers, but it is getting easier.
Oh, that's good to know. Good to know. And something else I'd like to ask you about, that proposed 50-year mortgage. I mean, Danielle, that is unbelievable.
Yeah, I think it's an interesting idea. I think it's a little bit complicated because if there were to be a 50-year mortgage, potential buyers who would take on a 50-year mortgage would see lower monthly payments. But there's a question as to how much lower those monthly payments would be, because much like the 30-year mortgage has a higher rate than the 15-year mortgage, I would expect a 50-year mortgage to have a higher rate than a 30-year mortgage. And a lot of the savings calculations between how much your monthly payments would drop from a 30-year to a 50-year mortgage assume that the mortgage rate would be the same. So they're kind of high-end estimates of how much the savings would be. And with a 50-year mortgage, you obviously pay a lot more interest up front and you build up equity more slowly. And then thinking about first-time home buyers being older and repeat buyers being older, a 50-year mortgage means you're likely to not have paid off your home by the time that you retire or pass away. And so it has implications for the wealth that you would leave behind to future generations. So I think it's an interesting idea. It certainly comes from a good place of trying to figure out how to get people into the housing market. But I don't think it's going to be a solution that is a good one for the vast majority of home buyers.
So Danielle, after all, the 50-year mortgage is just a proposal. But if it becomes reality, do you think anyone will really use it?
I think it will make sense for a very small subset of home buyers, those who are very young and maybe not yet into their careers, but do know that they want to make a commitment to being a homeowner in a certain location. They've got a longer time horizon, and for them, getting into the housing market earlier with a somewhat lower monthly payment could make a difference. But I don't think there will be widespread uptake. We've seen products like this before. The current regulatory environment does not permit them, which is why we don't see them now. But even when they existed before, they were not widely used.
So looking at the big picture for buyers, Danielle, if I am a potential home buyer, what would you consider to be my biggest challenge in the year ahead?
The biggest challenge for buyers is what it has been for the past several years, which is affordability. Even though it is getting better, it's still a very expensive housing market. Home prices are high. Mortgage rates will be a bit lower, but remain above 6% in our forecast. So, it's going to take a smaller share of a paycheck, but it's still kind of close to that 30% threshold. So it'll be technically affordable, but it'll still probably feel like a lot of money for home buyers. So that affordability aspect, I think, is going to continue to be the most challenging for buyers in the market. But the degree of challenge is going to depend on where you are. So in parts of the country, we expect home prices will actually decline a bit. And so it'll be a bit easier for buyers to see lower payments and maybe even to negotiate some contingencies with sellers. That's predominantly in areas of parts of the South and the West where we've seen more home building and where builders have been pricing very competitively and also offering things like mortgage rate buydowns to make it easier for buyers to get into a home. On the flip side, if you're shopping in the Northeast and the Midwest, those areas have been in really high demand because outside of the biggest cities, you have smaller secondary cities where home prices remain very affordable, even though they're like everything else, more expensive than they were 5 or 6 years ago. But as a share of income, or even outright dollars, they are less expensive than other parts of the country, and so people are interested in those markets because they are more affordable. So in those areas, we expect the market to be a little bit more competitive. We expect to see more home price growth. Even after the home price growth, those areas will still be highly affordable and are likely to attract shoppers from big metro areas who have the flexibility to relocate.
Interesting. And Danielle, in our conversation about the challenges facing home buyers in 2026, I did not hear you mention competition. Is that going away?
I wouldn't say it's gone. It depends on what market you're shopping in and what price point. But nationwide, on average, we think that inventory or the number of homes for sale is better balanced with the number of buyers out there in the market. We usually look at that from a month supply perspective. So, month supply is a measure of how many homes are on the market and how long it would take to sell everything that's on the market right now at the current sales pace. So 4 to 6 months is typically considered a balanced market. Anything under 4 months supply is considered a seller's market, where sellers have the advantage and buyers are scrambling and competing with each other and that sort of thing. And for the last decade, essentially, from 2016 all the way until 2024, we were in a seller's market. And anyone who has tried to buy a home in that time or sell a home in that time probably knows what I'm talking about, where sellers, could essentially name their price and get it, and buyers were competing. And, it was a tough housing market to buy a home in. But in 2025, we saw the market shift in a buyer-friendly direction. It's not yet a buyer's market in the US as a whole. There are a handful of markets that are outliers where we have had a lot more supply or a much bigger slowdown in home sales. Usually those two things happen together. And so there are a handful of markets where we are in buyer's market territory. But across the US, the market is balanced. So it's more buyer-friendly than it has been, but still not necessarily what we would call a traditional buyer's market, where home prices are falling and buyers can kind of get everything on sale and that sort of thing. So
Right.
it's going to depend on where you are. And those same trends I talked about, where the West and the South are expected to see relatively softer prices. They're also likely to see a little bit less competition because demand is a little bit weaker in those markets, and supply has been more abundant because they are building and doing a better job of increasing housing supply. So the market has returned to balance faster in those regions, whereas markets in the Midwest and Northeast, those outside of major cities, remain quite affordable, but they aren't building a whole lot. And so when demand heats up, and we expect it to remain relatively hot in those regions, prices generally are how we correct. And so we expect to see price growth in those markets.
And Danielle, before we leave buyers, let's take a look at the calendar. You said that 2026 may very well be a better year for home buyers than 2025, but is there any specific time of year that you expect will be better for buyers than other times of year?
Ooh, that's a good question. So looking at typical seasonal patterns, the fall is generally the best time for buyers because they face this seasonal combination of factors where there's still a lot of homes on the market, but the numbers of buyers in the market are generally lower. A lot of people search for a home in the spring and summer because the weather's nice, so it's easier for moving, and kids are out of school. It's a good time to move as a family and get kids resettled so they're ready when school starts in the fall. So the fall is generally the best time of year seasonally. Though if you don't want to wait that long, the great thing about being a home shopper nowadays is that you can leverage technology to work for you. There are sites like Realtor.com where you can save a home search based on your preferences, so that the machine can essentially always be searching for you. And the more tailored you set up your home search, the better the fit the listings that match your criteria are going to be. And it is a really good way to save your time and energy and kind of keep your eyes on the housing market so that you don't miss an opportunity when one comes to the market. Because even though we are expecting to see more homes for sale and the number of homes for sale is kind of getting back to a normal level, I can tell you as a home buyer, if you've got specific preferences, it can be hard to wait for exactly what you want. And so I think setting up that home search so that you can see it when it hits the market is still a good thing, even if you don't necessarily have to compete with as many buyers in the market next year.
Right. Great strategy, Danielle. Great strategy. And now let's go to the other side of the closing table and talk about selling my house in this brand new year. Now, for so many years, as we mentioned, it's been a solid seller's market in which sellers had all the power and buyers had very little. Now, we've seen that start to change in 2025. Will that continue in the year ahead?
In short, yes. I do think 2026 is going to be a more balanced market, which means, it's a little bit less seller friendly and a little bit more buyer friendly. Sellers are still in a decent position, especially those who have owned their home for a longer period of time, because obviously we've seen home prices go up significantly in the last, really in the last 12 years, but especially in the last 5 or 6 years. And a good number of home owners have lived in their home for a very long period of time. So they're in a really good position. They are probably sitting on a record, in aggregate, homeowners are sitting on a nearly record amount of home equity. So I think selling, if that's, if they're ready to move, they are probably going to be in a good position. They do need to be mindful of the type of market that they're in. We talked about those regional divides in the housing market. And so if you're in a market in the South or West, you need to price a little bit more mindfully of the competition, of any builders and new construction that are in your market, because buyers are likely looking at all types of homes when they're trying to make a decision. And if you have new construction in your area, you do want to think about that as an option, and consider the types of incentives and promotions that those builders may be offering to set a solid price for your home. But I do expect sellers to
I
be
see.
in a good position in 2026. And we do expect nationwide asking prices will go up. So again, it depends on where you are. In some markets, we may see some price softness, but in general, sellers are still in a good position.
And what about buyer demand? Will I find a steady line of buyers at every open house I do?
Again, I think there's a lot of variation and nuance in this year's forecast, but in general, if a home is priced well and in good condition, we would expect it to sell. You may not have multiple offers in the way that you would have a couple years ago, but it should sell in a reasonable amount of time if it's priced well.
And we talked about the supply of homes for sale is going up, not skyrocketing, but slowly going up. And as a seller, that would represent more competition for me if I want to put my house on the market.
That's right. You'll want to make sure that you're mindful of other listings in your area if you're putting your home up for sale. And inventory is expected to increase about 9% nationwide. It's worth pointing out, even after that increase, we'll still have 12% fewer homes on the market in the year 2026 than we did before the pandemic. So nationwide, we're still not back to normal, but there's pretty significant regional variation in that metric, like in so many others. In the South and West, we've seen a lot more recovery. And in fact, some markets in the South and West are already back to pre-pandemic levels and have even tipped into buyers markets. So sellers in those markets need to be especially attuned to local conditions and make sure they're not getting too aggressive on price. In the Northeast and Midwest, we still see a big shortfall in inventory relative to before the pandemic. And so markets there are more balanced, with some even still in sellers market territory, and sellers, have a little more leeway in those areas to price more assertively. But again, if you price aggressively in a market where momentum is kind of fading, as we're seeing in the 2026 housing market from sellers to buyers, it can mean that your home will sit for longer than you'd like. So it's important to consider, when you're setting your price, how quickly you need to sell.
And that is the kiss of death, because if your home sits on the market month after month, you know what's going to happen. Buyers are going to come in and give you a low ball offer every time.
Yes, that's true. It's better to price correctly up front than having to make those adjustments.
And now, Danielle, the same question I asked you about buyers. If I am a potential home seller in 2026, what would you consider to be my biggest challenge in the year ahead?
I think in 2025, we saw that a lot of sellers were still anchored to market conditions from the pandemic era frenzy, where we were in strong sellers markets everywhere across the country. I think fortunately, sellers appear to have adjusted their expectations, and I think they're likely to approach 2026 with more realistic expectations, which is one of the things I think that will contribute to more sales in 2026. But if I'm wrong about that, I think that will be a big challenge. I think sellers have gotten used to almost a decade of a seller's market, and adjusting to this new normal could be a big challenge for sellers. So I'm optimistic that they'll navigate it well.
And finally, Danielle, home owners, people with no plans to buy or sell. Will they continue to see their equity grow in the coming year?
On the whole, I would say yes, though again, it depends on where they are. Price growth is expected to be stronger in the Northeast and the Midwest, and a bit softer in markets in the South and the West. But for homeowners who are staying put, they're likely already sitting on a substantial amount of equity, especially if they've been there for several years. But in those regions where we expect equity to continue going up, that does create opportunities to potentially tap into that equity for remodeling or investment or that sort of thing. It's not specifically in our published forecast, but I would expect remodeling to continue to be an active subset of the home building industry in 2026, because even though mortgage rates are coming down, they remain quite high. And we do talk about this in the published forecast. The lock-in effect is still a factor for a lot of homeowners because there are still large shares of the housing market and homeowners who are sitting on very low outstanding mortgage debt. Roughly 80% of mortgages have a rate of 6% or lower, and market rates are expected to be above that for all of 2026. So in many cases, homeowners might choose to remodel and adjust their current home to fit their housing needs rather than moving and giving up a low rate mortgage. I still expect that to be a phenomenon in 2026.
One of the biggest questions in real estate, to move or improve?
That's right.
Well, Danielle, I really appreciate you coming on the show today and giving us a detailed forecast on what buyers, sellers, and homeowners can expect in the year ahead. And before you go, one more time, let me wish you happy holidays.
Thank you, Stephen. You too.
Thank you, Danielle. Danielle Hale, the chief economist at Realtor.com. Next time on Real Estate This Week, the winter market. Is the coldest time of year the hottest time to buy or sell a house? Or will the market slow down for the holidays? Expert advice on the winter market next on Real Estate This Week. And until then, I'm Stephen Gasque, and thank you for listening.
A brand new episode of Real Estate This Week with Stephen Gasque drops every Thursday, everywhere. And you're invited to listen, subscribe, and follow us. Just look for Real Estate This Week with Stephen Gasque. The best real estate strategies out there, just for you.